Welcome to Money First CEO, the podcast for business owners ready to run their business like a boss and make their money work smarter, not harder. I'm Harman Johnston, bookkeeper, Profit First professional, business coach, and mum of two from Sydney, Australia. I've built a thriving business by mastering money habits and systems that create real freedom. This show will help you take control of your finances so you can build a business and life that truly works for you. Every episode delivers one powerful takeaway you can action right away for more clarity, confidence, and cash. And from time to time, I'll be joined by special guests, fellow entrepreneurs, experts, and real business owners, sharing their money wins, lessons, and insights to inspire your next move. Because when you put money first, you unlock the options and freedom you deserve. So hit follow, grab your coffee, and let's dive in. Hey there, and welcome back to the Money First CEO, where we believe if you put your money first, the rest will follow. I'm your host, Harman Johnston, and every week we dive into practical money strategies, profit first principles, and personal finance habits that move the needle in your life and business. Today's episode is going to clear up one of the most frustrating and confusing moments business owners face. You get your P&L or your profit and loss from your accountant. Maybe it says you made 75 or 100,000 or even more. But then you log into your bank account and see just enough to survive the next couple of weeks. And you're left wondering, where's my profit? If that's happened to you, you are not alone. And you're definitely not bad with money. This disconnect between profit and cash is common, but understanding it is a game changer. And here's the truth. Profit and cash are not the same thing. Profit shows how your business is performing. Cash shows whether your business can survive. You can be profitable and still broke. You can look like you're winning on paper, but feel cash poor every day. That's not just frustrating, it's dangerous for your decision making, your mental health as a business owner. So let's break down why this happens. I want to share 5 reasons your business might be showing a healthy profit, but your bank balance feels tight. First, timing differences. Profit is calculated when income is earned, not necessarily when cash is received. So if you've sent invoices that haven't been paid yet, the income still shows up in your books. Same with expenses. You might have received bills and recorded them, but not necessarily paid them right away. So the action step here is start reviewing your accounts receivable and payables every week. It gives you a real-time feel as to what's actually yours to spend. Second, big purchases. Let's say you buy a laptop for $5,000. That cash leaves your bank immediately. But in your books, that cost gets depreciated, spread over a few years. So it barely touches your profit this year. That means your bank balance drops, but your profit and loss doesn't show it. So how can we get around that? Plan ahead for big spends. Build a buffer or a sinking fund to avoid that cash shock. Next one is loan repayments. Only the interest payment shows up on your profit and loss, not the principal. And that big chunk of your payment comes straight out of your bank. And the action step here is make sure you're forecasting full loan repayments in your cash flow plan, not just relying on your profit and loss. The fourth one is taxes and super obligations. Your profit might look amazing, but if you haven't set aside money for GST, pay-as-you-go withholding, income tax, or super, those payments will wipe out your cash when they hit. So here's what to do. Open a dedicated tax account and move 15 to 30% of your income there regularly. Out of sight, out of mind. And when tax time comes, you're covered. And the last one is paying yourself. But not through wages. If you're a sole trader or a company director and you're taking drawings or dividends instead of a wage, that money doesn't show up on your profit and loss, but your bank account feels it. So what's the fix there? Get intentional about how and when you pay yourself. Treat it like any other fixed expense and build it into your cash planning. So now that you understand the why, let's talk about what to do. The key here is learning to manage cash, not just profit. Profit is a story, cash is survival. Here are some tools and habits to build. Start using a cash flow tracker weekly, not monthly. Or to make things easier, implement something like Profit First. Allocate every dollar into set buckets: profit, owner's pay, tax, expenses, and use separate bank accounts to create boundaries around your money so you know exactly what's available. And make reviewing your cash part of your CEO routine. It's not sexy, but it's smart. And here's the part that'll be really helpful. Make invisible money visible. When it's all lumped into one account, it's easy to think you've got more than you really do. Separating your money puts you back in control. So let's wrap up with one simple, powerful action step. How about we start off with tax? Open a bank account called Tax and start transferring 50% of every payment you receive into it. Even if you don't have a big tax bill soon, building that habit now will save you stress later. You'll thank me for it. If you ever looked at your profit and asked, where did it go? Now you know why it's happened, and more importantly, how to stop that cycle. If this helped you get clarity, share it with another business owner who needs to hear it. Hit follow, drop a review, and thank you for being part of this mission to build more financially empowered business owners. Remember, put your money first and the rest will follow. Thanks for hanging out with me on Money First CEO. If you got value from this episode, hit subscribe, drop a 5-star review, and share it with someone who's building their business too. All the goodies are in the show notes, and you can find me on socials, more tips and tools to help you. Until next time, keep putting money first and the rest will follow.